Inflation has started to move up now, we think partly in response to tariffs.
The Fed projects higher inflation and an economic slowdown. Eric Diton of the Wealth Alliance, the Fed left rates unchanged as expected, but what did you make of the tone and the language of the Fed statement?
Yes, the Fed did nothing, but they did have a lot to say. So growth ratcheting down, 2.1% down to 1.7. Inflation ratcheting up, 2.5 to 2.8. Last time they said risks are in balance. This time, they didn't say it. And they used the magic word, uncertainty. Since the Beige Book on March 5th, when that came out, the Fed used the word uncertainty, uncertainties 47 times. That's more than COVID. That's more than the financial crisis. That's more than the popping of the tech bubble. So this is apparently the most uncertain time ever. And that's what they said. Uncertainty has increased. And look, we all know this is coming down to Trump and tariffs, and no one really knows how it's shaking out. And that's what the Fed's saying.
So to your point, the Fed put out its economic projections, but how can it really make projections when we don't really know the ultimate effect of Trump's tariffs?
And that's a great question. The answer is we don't know, and the Fed doesn't know. Remember, the Fed a couple of years ago said inflation's transitory, don't worry. And then they said, oh, wait, we have to raise rates. And they raised rates 11 times. Here we are again. They're going to make projections, and they're going to change those projections. And the bottom line is they really don't know. And quite frankly, I don't know that Donald Trump knows. He's got a strategy, but he doesn't know how other countries are going to react. He does not know how it will proliferate through our economy as well as global economies. And so all that uncertainty means the Fed just doesn't know. And quite frankly, it's hitting every part of the economy. I mean, if you look at the Michigan Consumer Survey, dropped over 10% in this last month. The uncertainty index for small business, one of the highest readings ever. And of course, we now have investors' bearishness ticking in over 60%. Is that a big deal? Yeah, it's a huge deal. It's only happened 6 times since 1987. So this all flip-flopped. You go back 2 months ago, one of the highest bullish readings ever. And in just a short time, one of the highest bearish readings ever. This is historic.
What tends to happen with markets when the bearish reading is that high?
I'm a big contrarian. And if you look, when people get this bearish, going out 1 year, you're generally up double digit, on average 13+%. And by the way, if you go back to one of the highest bullish readings ever, August of 1987, a couple of months later, 20+% crash. So being contrarian matters.
So if we have inflation expected to tick up and the economy is slowing down, and we have the Fed who today is still saying that they see rates coming down this year, right? But can that be possible?
Another great question. They're projecting 2 rate cuts, but behind that, they're still projecting 2. You've got other parts of that Fed, people who wanted to cut 75 basis points. There were 5 of them. Now there's only 2 of them. So that is a lean toward hawkishness. But the bottom line is that the spread of Fed funds to growth in the economy, we're still higher than we should be. The Fed does have room to cut rates about another 50 bips to be what I would call in normalcy. But they're not in a rush given all this uncertainty.